It's kind of somewhere in the mid first quarter, January, February. I went and looked at the entire market cap of the entire renewables sector as defined by Bloomberg. So it's 635 companies. And this is just wind and solar related companies, and I guess some battery tech in there, but it was not EVs. It didn't include Tesla. But the market cap of those 635 companies was, close to $750 billion. And then if you looked at the other side of the balance sheet, there was also, about $150 billion in debt. So you had almost, $900 billion of enterprise value. The cumulative earnings of those 635 companies with $900 billion of enterprise value, $5 billion. So trading at roughly 200 times, 160 times if you just do it on the equity cap. Flip side of that is, if you believe that renewables are going to grow, and I do, if you believe that wind and solar are going to take increasing share of the marginal electricity generation, and I do, you can buy the companies that make the copper, silicon, manganese. Cobalt, I think, is part of the story. As much as I think it's distasteful to invest in, the Congo, unfortunately, in order to make batteries stable and not catch on fire, you either have to have really sophisticated electronics around them, like Tesla or other manufacturers. But if you're going to make wide-scale, low-cost EVs, cobalt's going to be part of the equation for a while. Okay. But if you take out cobalt, then you got a nickel problem, because then you have to dramatically increase the amount of nickel that you have. Yeah. So all of these things will be important. The rare earth minerals that make up for magnets and things like that are all going to be really, really important as well. And so, and you just, I think the scale of what people are looking at, we've just gone through a political season where it effectively was a bidding war between different candidates who could promise energy independence and low carbon future and EV, who could promise it the fastest. I swear by 2040. No, I say 2035. Yeah. None of that had any basis in fact, economics, logistics, physical constraints. When we really look at these things, it's an enormous challenge to get this energy transition. And just throwing random targets out there, while it might be inspirational and aspirational to do so, it's really hard to make an investment case that you think it can go even close to that fast. You had the head of Toyota come out and say, look, I know, the Japanese government has said we want to have this many EVs by 2025. You do realize we'll run out of, battery materials by 2023 if we do that, if we build it at that pace. Okay.
Just for Japan.
Just for Japan. The same thing happened in the UK. It was hysterical. The UK said, all right, we've got these great 2040 mandates. And for that, we want to make sure we're 100% EV sales by 2030. And so what is it? I think, can't remember the guy's name. It was the head of Earth Sciences at the British National Museum, kind of raises his hand in the back of the room and says, just so you know, to do that, the UK, which represents 1% of global population, would consume 100% of every year's annual growth in copper. They would consume 300% of the growth in lithium, and 500% of the annual growth in rare earths. So there's a wild disconnect between the anticipation of how fast this will come, and how fast it'll, and the equity opportunity that lies there. So to take this back to how do you invest it from an equity standpoint, you've got this, almost $1 trillion worth of EV enterprise value with, 5 billion in earnings. I've got a single palladium and platinum producing company with like a $12 billion market cap that produces $5 billion in earnings. And if you believe in hydrogen or all these things, they're going to need to have platinum and that you need to continue to have auto catalysts, because if you still have a lot of cars on the road, we can go from 5 million EVs to 150 million EVs over the next 10 years. It's huge growth. But you're still going to see internal combustion engine cars go from about 1.2 billion to probably 1.5. So there will be more internal combustion engine cars on the road in 15 or 20 years than there are today. It's just math. You cannot transition that fast. We don't have the money, and we don't have the materials. So from that standpoint, I think the way to play it is, the companies that are really involved with these materials that are necessary for the EVs to grow. They won't grow as fast as people expect that they will, but that doesn't matter. They're going to grow fast enough. They're going to grow within the constraints of those individual markets. And that will be, basically price of these raw materials will be the regulator